Well, JSPL has won rail contracts worth around 665 crore from Rail Vikas Nigam, and it's going to be supplying 89,000 odd tons of rails to RVNL. And joining us to take the discussion forward is the Managing Director of the company, Mr. Naushad Ansari. Hello and welcome to Bloomberg Quint, sir. Hi, this is Nikki. I'm going to be starting off by asking you about the spreads of this order. What is the EBITDA per ton that we expect from this order right now?
So I think the important thing we need to understand is that in less than 1 year, we have got this second major order from Indian Railway or their associates. RVNL is, of course, an associate of Indian Railway. There is another arm. And as you're aware that last year, at July, August, we got this order close to about 90,000 tons of railway order, which we already have supplied maybe 4 to 5 months before the time which was there. And they also gave us additional 30% order at that point. Now this new order which is there, RVNL has given us close to again about 90,000 tons of order. This new order is also, this is at a price which is much better than what it was for the Indian Railways, because in between obviously the costs have also gone up a little bit. So therefore this railway order is in much better scenario. I will not really talk so much about EBITDA per ton for this, but what is important is that it is really quite comparable, and it has a good potential compared to the EBITDA for the other products. And also the important thing is that with this we are firmly on the way to supply a very substantial quantity of rail orders to Indian Railways as well as their associates. So to answer your question, yes, it is a reasonable EBITDA which is there, much better than what it was for the Indian Railways order.
I was just going to come on to that one. I was just going to ask you how different is this as compared to your previous order. Now that you've delivered the first order, I'd like to understand what is the margin or the EBITDA per ton that the company made on the first order.
So the first order was, we had just given an entry price which was, which was okay from the point of view of, at that point of time. But that was relatively lower compared to the other products which we are able to make out of that mill. Now this price is by and large, in line with the other products which we have been supplying. For example, this rail and universal beam mill. That's something where we make the structures, the heavy structures as well as the rails. And the heavy structures also fetch us very good price. And this rail order is by and large in line with that. Now you are already aware that our EBITDA, you're familiar that our EBITDA per ton has been in the past somewhere close to about 12,000 rupees, that depending on different scenarios, somewhere around that region. And this is no less than that, maybe a little better.
Industry for quite some long time now has been rallying for additional curbs on imports from Iran. Has something been done on that front, and if at all, any measures which are in offing?
So that's a very important issue, the import from Iran as well as also from the FTA countries. So yes, we have been looking for some anti-dumping measures. We have already made application. It is waiting for, it is under consideration at DGTR. So we are pushing. We as a company also we have Indian Steel Association, so everybody is working on it, and we are hoping that very soon some results will be forthcoming out of this.
One last thing from you, if you could put a number to the HRC prices and the iron ore prices that you foresee by the end of this year, or FY20 for that matter. And also ArcelorMittal yesterday in the press release in its commentary said that they expect lower demand coming in as a whole. They've actually reduced the forecast for world ex-China, giving a growth figure of around 1 to 2% in 2019 as compared to 2 to 3% that they had estimated earlier. I'd like to understand your comments on the same.
So, you asked for two prices, that what is likely to be by the end of the year. I wish I really have very good answer to that. But let's say if I was to just make a guess, I would imagine that the iron ore prices which are within India, I am saying, within India, the iron ore prices would remain in the same range. International prices which have also gone up very substantially, and the reason for that was the Wale incident and the other, the Australian typhoon which was there. Those are the things which really resulted into this prices going up substantially. I think by year end that should also get corrected, because the right stable prices for internationally for the iron ore prices would be somewhere between $60 to $70. That's the way you really expect, maybe even lower. But today today is much higher. So my expectation would be that the iron ore prices in India would remain in the same range at where it is today, maybe actually come down marginally by the year end. That is number one. As far as HRC prices are concerned, internationally the prices are at very low level today. Internationally they may be somewhere around $540 or so. I would expect that these prices will actually go up marginally by the year end internationally. As far as India is concerned, today we see that a little pressure because of the liquidity issue. Once the elections are over, once the a new government is formed, whichever government it is, I'm sure better stability would come, and we would have a much better liquidity position. And with that liquidity position, the basic demand in India is still very strong, and and that's something which is really very good. So basic economics wise, I think we should have a better pricing compared to what it is today. By the year end, I don't know the exact number, but I would say that it should go up by at least 8 to 10%.
Thank you so much for talking to Bloomberg Quint.
Thank you.